everybody. Welcome to the weekly Route Consultant webinar. My name is Josh Gregory. For all of those who I've not met before, I'm one of the directors here on the consulting team at Route Consultant. For everybody else, for all of our regular attendees, welcome back. And for anyone who's new here, who doesn't know what the format's going to look like, we try to have a lot of fun here and make sure that we have a lot of dedicated time at the end to answer any of your questions, and also have a little bit of content and go through some things to help teach you more and help educate you on the space. Now, before we get into all the fun stuff, I just have the quick, boring disclaimer I have to read every week. So Route Consultant is not endorsed by and is not recommended by Federal Express Corporation and FedEx Ground. Route Consultant is not sponsored by, is not approved by, is not associated with, and has no connection whatsoever with Federal Express Corporation or FedEx Ground. Now, all that means is that you're not going to hear anything materially non-public here. We're not going to give any stock or company secrets away. This is designed to educate you on the industry, though, and we do want to make sure that you are learning and that all of your questions are getting answered with all the time that we have here today. Now, before we get any further, I just want to remind everybody of a couple of events we have coming up. If you are a new or prospective contractor and have not been to one of our investor summits, highly encourage you to join. The next one we have is next weekend or next Thursday and Friday on July 7th and 8th. And that one will be virtual. And then we have an in-person one here in Nashville, Tennessee on July 28th. If you've never attended one of those, they are designed for a full 2-day experience where we try to immerse you in as much as we possibly can. Everything about the FedEx industry to try to educate you, but also really help you make the decision if this is the right space for you, and help you kind of at the end of that to know if you want to move forward there or go somewhere else. For all of my current contractors, just a reminder again that we have the huge annual expo coming up in Las Vegas, August 20th to the 21st. And really, if you've never been before, this is a time for us to all get together, learn from each other, and really rally before we head into peak season. And so I would love to see all of you there. Make sure to come and find me, say hi, and I'll get to actually see you in person since you're always seeing me. Now, a reminder for everybody, when we get to the Q&A section at the end, and you're able to put in all of your questions. When you put in those questions, make sure to put them in the Q&A box at the bottom, not the chat. If you put it in the chat, we'll miss it. But importantly, for us to answer one of your questions, you have to first answer one of ours. So the question of the day this week is, what is a skill or talent that you wish you had? So make sure to answer that question first, and then after that, you can send your question in that we will answer at the end. Now, just before we get into the content, real quick, I just want to run through a couple of our new listings that have come out this week. So from a P&D perspective, we have a few new ones. So we've got one out in Westchester, PA, Pennsylvania. So it's 6 routes, and it's selling at $550,000. It's got a manager, it's got a contractor with a lot of experience who's selling it, and the entire fleet is 2020 or newer. So that's fantastic for getting into the space. Then we have a set of 3 carves out of Wisconsin. So the first piece is 8 routes at $506,000, and it has a manager and 3 spare trucks. The next piece is another 8 route piece, $358,000, and it has 1 manager and 2 spare trucks. And then the last piece is 9 routes at $297,000 with 1 manager, and then most of the trucks are brand new as well. So 3 pieces there out of Wisconsin if you're looking in the area. The next one we have is in the Charlotte, South Carolina area, 11 routes at $700,000 with 1 manager, 1 spare truck. It's a contractor selling it who has over 12 years of experience, and there's even 3 spare drivers for contingency if you want it. We've got one in Western Oklahoma, 9 P&D routes at $990,000. And this one has a manager, 6 spare trucks. And there's also an option here around both assumable truck debt and seller financing. And currently this is one that's run remotely. So if that's something you're looking for. We've got another piece out in North Carolina that is 8 P&D routes at $875,000. And that one has a manager, 3 spare trucks, a contractor with 30 years of experience. And it is one that is located really close to the terminal. Next one is in South Carolina, 12 P&D routes at 1.35 million. This one has a manager, 3 spare trucks, 3 spare drivers. So one with a lot of extra options there if that's an area of the country you're looking to get into. Now we've got 2 pieces down in Cocoa, Florida. So we've got 8 P&D routes at 1.415 million. And that one has a manager and 2 spare trucks. And then we've got another piece that is 6 P&D routes at 1.1 million. And that one is a manager and 2 spare trucks. So if you're looking in that area, Florida ones come and go quickly. So those are 2 new ones we've got out in Cocoa, Florida. We've got one more P&D operation out in Durham, North Carolina. And this one is 6 P&D routes at 725,000 with a spare truck, a spare driver, and really dense routes. So that's all the ones for P&D. We've also got 1 new line haul listing in Rialto, California. 2 line haul runs at $400,000. They're both unassigned solos, and it's a low price entry point to get into the line haul space if you're looking out in Rialto area. The last couple of listings we have are for the Amazon side. So we've got a Boston listing out on the North Shore, and it's 20 routes at 1.395 million. This one has 4 managers, 7 spare trucks. There's none of the downtown stuff you have to deal with in Boston, so you don't have to deal with that traffic. So a really hot area. So if you're looking for something in Boston, we've got something on the Amazon side. And then the last one is in Central Florida. It's 30 routes, 15 spare trucks. It has dispatchers and lead drivers and really clean financial records. So if you're looking for something in that area and you haven't found the right FedEx business, Amazon might be the one to look at. So those are all the listings we've got that have come out new this week. So if you have questions on any of those, reach out to the team. We can get you more details. Now, normally I go through all of the content myself, but today we have a special guest. So I have brought our CFO, Leland, on today to talk through a lot of the ideas around getting the right financial strategy in place for success, both for prospective and new contractors and our current ones that have been around a while. So Leland, if you want to come on camera now, we can go ahead and get started. Oh, I see you already. So perfect. So Leland, I've got a few questions of my own that we'll go through. And then after that, I'll open it up to general Q&A for either Leland or myself at the end, as we always do. So Leland, if you just want to give a quick intro, just say hello, kind of what your position is and how long you've been with Route Consultant, anything like that before we jump into questions.
Sure. So I've been an accountant for, gosh, about a little over 20 years now. I'm embarrassed to say that a little bit, but the focus for the last over 5 years has been on the logistics space, specifically in Spencer's company. I've been here in Nashville for a little over 5 years. Before that, I was in healthcare for almost 10. And before that, I was in public accounting, primarily auditing, a little bit of tax, but primarily auditing in that scenario. And so that's kind of the background. Originally from Mississippi, absolutely love it here in Nashville and have every intention of staying right here. I think I've found my place.
Yeah, my family is also from Mississippi, but I'm pretty sure I'm not going back. So I agree with you about Nashville. So Leland, just to kind of get started, I know a lot of times when we have people who are looking to enter the space or even who are close to closing, I think one of the things that I like to hear the most from you and to make sure that our buyers and contractors are thinking about it the right way. Can you just kind of walk through what some of the key things are to make sure that they set up and prioritize to make sure that they get the business off the ground and have the right financial strategy in place?
Sure. Happy to do that. I really kind of think about that in 2 different channels. The first channel I would think about is the actual structure of the company. You're going to be restricted to pretty much a C Corp or an S Corp and how you establish the company. Everything that we've done up to this point has been in the S Corp channel. It just gives a little bit more flexibility to operate a little bit more like a partnership, and because it's in many small business instances, it needs to probably feel a little bit more like a partnership rather than the formality of a C Corp. And it just gives you a little bit more flexibility. So that's the path from a structure standpoint that we've taken. It has never been an issue whether we picked S Corp over anything else in regards to banks. So, early on as a contractor, when you're thinking about how you're going to be operating, one of the important things to think about is your relationship with a bank, and that hasn't created an issue at all. It doesn't put you subject to audits or anything like that that you would otherwise not be beholden to. So that's my humble opinion on the initial corporate structure. And I would engage an attorney just to make sure that your initial agreements are set up correctly. We use a really good attorney that puts it together for about $500 or so, and it is always a buttoned up package, and it is always something that the banks appreciate because in our position, the different things that we do, it is so common to see we'll get bylaws from here and articles of incorporation from here and all these different pieces. When you do it the right way, it doesn't have to be expensive. It can be set up correctly from the start if you choose the right people, and it will make your life much easier as you're working with different third parties as you're moving forward. So from a corporate structure, that initial moment of inception, that's kind of the mindset that I would recommend you have on that. When it comes to the operation side and putting yourself in a position to minimize your time in relation to the business, I would highly recommend using a third party, unless you're an accountant yourself. There's people out there that are going to be an attorney, that'll be an accountant and are going to feel comfortable going ahead and initially filling that bookkeeper / accountant role. Spencer did that for a few years. He'll be the first one to tell you that it was a challenging role for him. I think he says it's not his gifting, and ultimately he could do it for a little while. But as you grow, if you're looking to scale, you're going to want to be in a position to focus on the business and adding value in a way that keeping the books themselves is going to be limited ultimately. So as you're thinking about moving into this space, or maybe if you're new to this space, we recommend having a third party bookkeeper and letting them do kind of that dirty work, that in the weeds work that allows you to be an end user of the data and ultimately be making decisions that make the business better rather than creating the data that allows you to analyze and see what you're doing really and what your profitability is. Does that initially give you the structure? I mean, we've got tools and software and things that I can certainly recommend if we want to go further down that channel, but I really look at it as two components: initial corporate structure and then mindset as to how much I really want to be in the weeds from the bookkeeping standpoint, because those are two key decisions that are going to directly influence how much brain damage you're going to have in relation to the financial operations of the business.
Yeah, I think that's perfectly fair. I think those are really important things that, we talk about it all the time, but those are the key things just on the financial side that if you can make sure those are set up from the beginning, it's going to save you a lot of headaches in the end. And there's a lot of things like that you can do on your own, but it's just, it makes sense to pay someone else who's that's their job to do it. It'll save you a lot of time and heartache.
Exactly.
So for a new contractor too, what do you think would be the most important kind of operational and line items that they should spend the most time worrying about in the beginning?
Yeah, so when it comes to monitoring the business, I would encourage each one of you to get comfortable with developing a plan. I think the FedEx space is one of the benefits that is specifically related to the FedEx platform is that you've got a limited number of variables that you really have to monitor, and it makes it easier to budget. And so if you've got a budget, then you've got a roadmap to profitability. And if you're not profitable, it should tell you why. A good budget will. And in the FedEx space, I think that's going to be one of the most important pieces, is to leverage that resource. You take that revenue that you're going to get from either a prior contractor or from your FedEx contract, depending on what stage of this process that you're in. And then from a monitoring standpoint, figuring out what's important, that's not too hard in this case, because you don't have to worry about advertising. You don't have to worry about how many people are going to be in the seats on a certain night eating food, like trying to manage a restaurant and having to advertise for that restaurant. All of that stuff is taken care of for you. You need to be able to find a driver. You need to know how much you're going to pay for that and what percentage of revenue that driver is going to be. You need to be able to plan from a truck standpoint how much those trucks are going to cost you, and make sure that you're doing things proactively to keep that truck cost in line. And I'm happy to talk about that for a minute as far as fleet strategy and how we approach that. And then, of course, fuel. A mistake that we made, I mean, if you want to just kind of start with a mistake that we made, early on, we used regular credit cards to purchase fuel because ultimately we thought it was going to be the right way to earn rewards and kind of get a cash back incentive and get kind of hedge our fuel costs, if you want to look at it that way. What it really turned into was chasing fraud, where we'd given our drivers the keys of the kingdom and allowed them to direct those resources into ways that we wouldn't have chosen for them to be spent. I think that's the safe way to say. So protecting yourself with a good fuel card is kind of that third piece that I would encourage you to have in place. We've used a couple of different ones. Our primary one is Fuel Z, because we're able to navigate and make sure that if we want them just buying 87 octane fuel, they can only buy that at the pump. They can't go in to where they can talk somebody into buying their Gatorade and stuff, putting it on the card. It's a very restricted, budgeted effort. So, as far as the monitoring, to, I guess, directly answer your question, this space lends itself to more visibility than other small businesses, and it makes it easier to plan for. You know what your revenue is, you know what your wages should be, you know what your truck cost should be as a percentage of revenue, and then you get your fuel piece. If you can make sure that those three things are in line with expectations, that initial plan that you set up, then everything else should kind of fall out, because there's not a ton of other things other than a little bit of insurance that are material to the business. So having a good understanding of how to set that plan in place is where I would start.
Yeah, and I don't want to understate how important that is, because we talk about how, it's trucks and drivers, there's limited things to monitor, but I see a lot of people who, because there's less to worry about, they just don't worry about it at all, and they just kind of let things run as they operate. But as much as you can, if you can set up a plan from the beginning and then continue to follow that plan and really stay laser focused on a few key areas, then you can keep those margins in the place you want them, or at least see the problems coming before they become mountains that you can't overcome.
Exactly. And I'll just kind of speak to that for another minute. As we think about right now, this difficult environment that every small business is in. I mean, we're all dealing with different challenges, from rising costs and limited availability of products and parts and services. Good gracious. I mean, it's hard enough to go through a drive-through and get a Big Mac in 10 minutes at this point because of some of the challenges we're all facing. One of the things that's helped our business in that front, as far as being able to monitor, we are experiencing the fuel pressure like everyone is, and the labor pressure has lessened some. I mean, I think there's really been some relief in that area, thankfully, at a welcome time. And then the truck cost for us has been something, because we've planned and projected out what we need and are following that plan. There are two different things. You can set a plan, but if you don't follow it, it doesn't mean anything. And in our case, we're monitoring it weekly, and I can kind of help you with that if we choose to go down that path. But, one of the things that's helped us on that third leg of the stool, the trucks there, we refresh our fleet. We refresh 20% of our fleet every single year, so that by the time we get to what generally is the end of a loan life cycle of 5 years, we've got a truck that's paid for. And that truck may be used up, it may not be, but it puts us in a position to constantly be recycling and refreshing that fleet. And, there's a few exceptions to that, where you might have a transit that's going on a very rural route and needing to be refreshed sooner than that. But ultimately, what I'm seeing develop in our financials is that we're not feeling the pressure as much on the repairs expense that I would have expected at this point, because of how much parts have increased. But right now, because our truck costs have not gone parabolic, we haven't let them get too old or too high mileage to where at some point you're just constantly paying to keep the truck on the road and paying a mechanic, instead of having freshen that cycle and kept newer trucks in your fleet. We've been on that other path, thankfully not in an environment like we're seeing right now, but we've been on the path where we kept older trucks on the road and had multiple repair shops in play to keep them serviced. And we've done the hard path. That's what we considered the hard path, and we would choose this one now. If we could go back and wave a magic wand, we would choose the refreshing the fleet every 20% every year, just to stay on a good life cycle. It's also going to help your balance sheet when a bank is looking at you and seeing that you're not driving an old fleet, you're driving a newer fleet that's not fully depreciated. It helps your bottom line and maintaining equity. I mean, there's other reasons to do it other than just that financial reason. There's also the lack of downtime that you'll definitely feel if you've got trucks that are out a lot and you're dealing with rentals and transport and all those things. That downtime can be a hard thing to quantify, but it's there for sure. So again, just kind of wanted to, when we're talking about the monitoring and the mindset to have as you're going into this or trying to, I think everybody all the time is trying to refine their processes, regardless of what stage they're in. And I would just encourage you to consider that.
Yeah. And I think that is another indication of what you mentioned a couple of times, which is as much data as you can have in a couple of these areas that feel simple, the better off you'll be. So both fuel, like any kind of reporting you can get from your fuel card, any kind of controls you can get there on the truck side, all of those things that you're monitoring and staying on top of. You might not be incredibly comfortable with data, but the more time you spend in it, the better you'll be and the better off your business will be.
Absolutely.
So I know we've talked a little bit about monitoring, but what kind of, or how often are you reviewing the financials? And what would you kind of say is good best practices there for any current contractor?
Yeah, so from our standpoint, we review financials every single week, and I would encourage every contractor, that's just the life cycle of this business. It's a weekly life cycle. And if you're not looking at it weekly, the simple speed bump of a rental truck that is out, that you've got deployed and not using, can turn into a slump just because you didn't get it turned in for 3 or 4 weeks and you didn't catch it. So I would encourage you to look at it weekly. At the last year's expo, I asked a room of hundreds of people how many of them are looking at a financial statement every week, and I would say about 3 out of every 10 people raised their hand. I was absolutely stunned. I thought it was just kind of a rhetorical question, but I learned a lot in that moment. And what that is if you're an operator that will devote literally an hour or less every single week to look at their operation financially, you're going to be ahead of most everyone else in your terminal and have visibility and be able to extract data and make decisions more informed than most people that you're going to encounter in the very terminal that you're working. We also look at them monthly and quarterly. So quarterly, we report to a board. Monthly, we're just looking at a full balance sheet, income statement, and then we're benchmarking the current month against the prior few months. At this point, we're into June, so we would look at how we're trending since January, but we would also benchmark June of 2022 against June of 2021 routinely to kind of see how we stack up there. And the big thing there, we're looking at top line revenue. We're also looking at the metrics that make the profit and loss, tell the story really. Is our labor cost still the same percentage, or has it improved, or has it regressed? Same with fuel, same with trucks, and kind of seeing what story that tells to let us know how we're operating the business. Are we getting more efficient? Are we maybe getting more efficient, but it's ultimately like in a fuel, there's only so much you can do about fuel. And so are we getting efficient in other areas to be able to offset that type of increase? So it gives you an opportunity to make decisions that you probably wouldn't otherwise, because you wouldn't have the visibility to even give consideration to what you can do better.
Yeah. So, I mean, really the idea is you want to be doing spot checks much more frequently, probably than a lot of people are, just so that you can see trends more quickly. Hopefully you're doing it weekly. If you can even get to the point where you're doing it every other week, that's better than once a year. So the more you can at least have an eye on it, the better, and use that financial strategy to inform your operational strategy. And if you don't have a CFO, you haven't gotten to that size or scale yet, it might be something that you're handling all on your own, but it still should be something that if you are going to own that side of the business, you need to own it. And it needs to be a part of your ongoing strategy as well.
Agreed.
So those are all the main questions I have. So I'm about to open it up to Q&A for everyone, either to me or to Leland. But before we get there, Leland, there's another important question you have to answer first, which is if you could have one other skill or talent, what would it be?
I thought I was going to get by without answering this.
Yeah, you never can escape the question of the day in the webinar.
I think I would have to say, if we're talking in imaginary skills that I could possibly have, I'd probably pick being Spider-Man. If we're talking about real world skills, I would want to be the skill set of Carter Beauford, drummer. Sorry.
Yeah,
drummer.
yeah,
So,
that's great.
I love playing drums, but I would love to have his ability.
Yeah,
so,
you're not quite at that level yet. Yeah,
no,
I think
not at that level.
you might move on from being a CFO if you had that in your back pocket.
Touche. Yeah.
Yeah. Yeah. So for me, the same question. I think the thing I've always wished, I love to travel, so I wish I could learn languages quickly. I don't even know Spanish very well. I was one of those who took Latin in high school, so I didn't even get away with that. So I would love if I could learn languages really quickly. And then I think a simple and dumb one that I wish I had is I wish I could whistle. It was one of those things I could never do. And I had two sisters growing up, and both of them found out really quickly that that was something I couldn't do. And so they both learned how to whistle really well and did it all the time. So it's just something I never could do. So that's the little one I wish I had. Okay, so let's get in the Q&A. And remember, if you are asking a question in the Q&A, make sure you answer that question as well. So answer what skill or talent you wish you had. So the first one we've got here is from an anonymous attendee, basically saying, I wish I could fly. That's right in line with what we were talking about. I would agree with that one as well. It would save me a lot on gas right now. So if I'm currently employed by a contractor and am a prospective investor, how long till stand up can I stay employed? So what I would say on that one is, if you are trying to decide whether to leave your job and become a contractor, you can go through the process. You can even interview with FedEx. I wouldn't quit your job until you found out that you're much closer to finding out you do have a contract with FedEx, because there's lots of things in the deal process that can happen before you actually stand up. So I would wait until you've actually gotten to the point where FedEx is about to give you a contract. You'll still have several weeks after that, long enough to give a 2 weeks notice and still be fine. But I would not try to immediately quit your job. It may be months before you finish if you're still at the point where you haven't even interviewed yet. Next one is, so his skill set that he desires is to ignore bad news. That also sounds great. Hear that one. Yeah, or at least to always treat it with a positive mindset after getting it. Sometimes it's important to hear it. So since a lot of success depends on fleet management, is there a specific software or spreadsheet comparing leases and purchasing and entering variables? So normally what I would say is there are some softwares, there's spreadsheets as well. Leland, do you use any specific softwares, or is it mainly through Excel and spreadsheets?
It's really been just internal spreadsheets at this point. I think Hello Truck Lease actually utilizes one of them that we've developed to just kind of help provide that background analysis, lease versus buy type comparison for prospective customers.
Yeah, I would definitely say if you're trying to compare leasing and owning on the P&D side, Hello Truck Lease can help you with that modeling. Specifically around fleet management, there's a few different vendors who can help you with modeling and keeping track of invoices, and using that as also more of a preventative maintenance type tool as well. Plenty of cheap ones out there, Fleetio, Whip Around, plenty of others. But a lot of people do use spreadsheets. If you're at least doing the minimum of having spreadsheets around fleet management and costs and projection, that's better than nothing. So spreadsheets at minimum is where I would say to start, but there are plenty of different vendors and softwares that can help there if you're looking for something more robust.
Yeah, I think Merchants is really robust, pretty robust as well.
Yeah, they are. All right, next one is from Jason. His skill is he wished he had is to know how to ferment really good wine. I agree. It seems, I know I've done like little kits that have worked where it's taken very little effort from me, but I don't think I could say it's really good wine. So I think that's the caveat there, and I agree with that. So what data or metrics should we be looking at each week to know if we're winning or losing? I'm confused by the daily service worksheet. I'd start by saying that's fair. The daily service worksheet is a very large spreadsheet, and so kind of learning what you should care about and what you shouldn't is is a bit of a challenge. Mainly the main things I'd tell you to track on the daily service worksheet side from an operational standpoint are the stops, mileage, and hours of your drivers. So there are certain metrics we look for from efficient routes. And so you can get all of those columns from the daily service worksheet. So looking for at least 7 hours on the road for each driver. And then based on the mileage, there's a certain number of stops we like to see from an efficiency standpoint. So at minimum, you can look for those three. And basically just trying to track another thing to look at is how many stops your driver took on versus how many they successfully completed, try to see what kind of gaps there are. But I think the second side of this question is, what are the main metrics that you should be looking at financially to make sure that you're on top of things? So when you're looking weekly, Leland, are there specific metrics you look at?
So the weekly piece, we really look at 5 different things. We break down the entire profit and loss, whether you've got 20 accounts on your profit and loss or 40. We still distill them down to 9 numbers. You've got revenue, and then you've got wages for your drivers, wages for your manager, payroll taxes that are related to those to make sure that we're good there. We look at then trucks, fuel, insurance, and other. And so, just to talk about those categories for just a minute, if you've got a plan, like we were talking about just a few minutes ago, you're able to see whether trucks, people, and fuel are in line with your expectations for the week. So that tells you whether you're winning or not. The insurance component is really the only other material piece of this. Your insurance expense should not exceed 6% of your revenue over a given month, quarter, year. Weekly is probably going to spike a little bit because generally insurance is going to be paid monthly instead of weekly. So you're going to see a little bit of fluctuation there. But ultimately, it should be 6% or less of your revenue. So that's another key metric. And then when I say 4 numbers, those are the 4 main numbers: people, trucks, fuel, insurance, and then everything else is going into that other bucket. And that's really where some of your bleeds can be. So we monitor that every single week. That's going to be stuff like if you get dinged by FedEx and have to pay some sort of property insurance or property claim, where you've got to pay $1,000 or $2,500 deductible for knocking over a mailbox or a basketball goal or something like that. So that stuff will creep in there. And you've got your bookkeeping fees and different things that are in there that if they're exceeding probably 2.5% of your revenue, maybe 3% of your revenue initially, when you're small and don't have as much overhead, that's what's going to tell you whether you're winning or losing in that category as well. So that's what I would distill it down to: a large profit and loss, multiple accounts, down to about 9 numbers.
Perfect. All right, next one we've got here is from Randy. He said he wished he would be a rock star as well, best drummer in the world. So he'd be competing with your skill there, Leland. And then
Probably already has a head start on me, so
yeah,
it doesn't have to be very good to be better than me.
Oh, man. So his question is, do I need a corporation for the state that the route is set up in? And can you have 2 routes at one time, like Amazon and a FedEx route? So the corporation does not have to be for the state you're set up in. You can file as a foreign entity for the state you're set up in. So there's different tax reasons why you may set up in one state or another and operate as a foreign entity. So I would say if you wanted to give anything quickly, Leland, you can, but I'd say no matter what, you should talk to your attorney, accountant about the best way to set it up for you.
Yeah, I think your CPA would be the best person to talk to just to know your specific instance. But we certainly have home bases as far as our original corporate filing, and then operate as a foreign entity depending on what state that we purchase or take over routes in. So, I wouldn't get too wrapped up in that. I would just make sure that I picked a tax advantageous state to form in. In our case, we're dealing with multiple, and there's plenty of them out there, Tennessee being a good one.
And then the second part of your question, Randy, can I have 2 different businesses at a time, like Amazon and FedEx? And that is, yes, you can operate both of those. You can be a DSP and an ISP, and that's completely fine. I know plenty of people who started as Amazon, went to FedEx, and vice versa, and it happens all the time.
I want to add something real quick, Josh. When you're thinking about this, I don't want to create confusion here as far as the corporate tax and maybe that foreign. You're going to be taxed on the revenue on where that revenue is earned. So when you're talking to your CPA, just kind of go into it with that mindset that it matters very much from where you're going to be taxed on the state level, where that entity is that you've purchased. And so just keep that in mind, that it doesn't matter as much where you initially do your filing. It matters more where the revenue is being generated, because that's the state tax law that's going to come into play for you. So I just want to give that clarification.
And that is a very good clarification. So next one here is from Andy. His talent, his desire still is to be good enough to earn a MotoGP ride for a factory team. And it's still a great one, Andy. Leland, do you have alerts set up for certain P&L items? Or do you just leave it up to those reviews? Is there anything where if it exceeds a certain threshold, you have some kind of alert set up, or is it all just based on the fact that we're reviewing in real time?
Yeah, so we're reviewing weekly. So an alert, I mean, we're as current as we really can be. The way this is structured, weekly is as recent or as current as you can really be. So no alerts really. We do use some color coding to make sure that the third-party users that are reviewing the data have certain things brought to their attention, but that's the closest thing to an alert that I could provide.
Yeah, and the reason you may have an alert, Andy, is if you, for some reason, were trying to decide that you were only going to look at it quarterly, we would still advise to be weekly. But if you did want to set up certain alerts, maybe that could be something that helps you if you don't have the time or ability to review it as often as weekly.
Yeah, and I think an example of that is like on Fuel Z, you would be able to set up an alert where if you got to this amount of spend in a given week, that they're going to tell you. You're going to get a text or an email saying, hey, you've reached this limit. So like that would be an example of an alert when maybe an expense was getting out of line with where you expect it to be. But it's not necessarily an alert that's in your financials. It's just an alert outside that's been generated to kind of help bring it to your attention. That's a thought.
Yeah, perfect. All right, next one here is from Maynard. His skill that he wishes he has. He said it might be boring, but a guitarist, don't think it's boring at all. I definitely cannot play guitar, so I hear you on that. And his question is, he's new to the business, sees there are routes that are selling. Does he need to establish a company before he purchases? So that is definitely yes. You do have to have either an S corporation or a C corporation to be able to contract with FedEx. So the basic process is you will have a corporation. You will, if you're buying a business, you would kind of enter into a contract with a seller. You would then approach the FedEx terminal, go through an interview, and then once they approved you, there are a series of steps that lead up to a closing. If you are going directly to FedEx, which is there's basically a way to get free routes, which are routes that FedEx is offering. But I say free because they generally don't come with trucks or drivers. So there's a lot of costs there, and it's usually basically starting from the ground up. But that process can look a little bit different, but still at the end of the day, you will need a corporation. You will still have to interview and get approved by FedEx before you stand up. Next one here from Faraz. He wished he was an architect engineer rather than a systems engineer. I'll confess, I don't know enough about the difference between those to know what you need to do to get there, but I believe in you. So what factors decide the route or run, if a route or run is eligible for SBA or not? So a few different things here. One, I would say if a business hasn't been owned for at least a year, if there's no tax return, it can be really difficult to get through the SBA or conventional. So that's often something we run into. The other big thing is if it's a carve out, if it's a piece of a larger business where we're having to split up the financials for the bank, that sometimes that can work. It just depends on how thorough their accountant can be to actually parse those financials and split them up in a way that a bank will approve. So that can just be a limiting factor. And then the other one is just sometimes if, over the past few years, the financials aren't clean enough for a bank, that doesn't mean they won't lend on it, but they may just lend a lower amount than you may want for that purchase price. So sometimes that it may be that it's SBA eligible, but just not as high of a price as the seller is looking for. So that can be the kind of limit there as well. I don't know if there's anything else you have, Leland, but those are the main things we run into.
Yeah, I think you got it.
Yeah. All right. And then Mirage. So skill is he wish he could fall asleep on a plane. I hear you on that. It is something I can sleep for about the first 15 minutes. That's all I've ever got. I can fall asleep with the takeoff, and kind of that slight recline is what takes me there. But I usually wake up about 20 minutes in, so I always bring plenty of things for a plane ride. So with regard to routes for sale, why are valuations based on multiples of revenue instead of EBITDA? I would say for us, they're always based on EBITDA. We may list the percentage of revenue, we may talk about that, but it always is a multiple of EBITDA. You may see another listing that is a percentage of revenue from another brokerage, and there could be reasons for that, but I'd say the industry standard is and should be as a multiple of EBITDA. That's the way almost all of these are valued. All right, I think we've got time for one or two more here. So Micah, his special talent wishes he had a photographic memory. That also would be very helpful for just about anything. What does the financial structure of a business that wants to scale up quickly look like versus a business you expect to focus on for a year before trying to scale up? So I guess maybe that's a question for you, Leland. Would you structure anything differently if you're trying to focus all of your time, energy on scale and cash flow doesn't matter? Everything's about growing as fast as you can. Would you do anything differently on the front end rather than something you're just willing to kind of let grow more slowly?
I could answer that. I guess a couple of tidbits here. Number one, I would very strongly, I would chart the path for setting up a C Corp for every single contract that you're establishing. So if you're looking for growth, I wouldn't want that growth to something to go wrong and cascade into any of your other business. And if it's all under one S Corp, it could just create a headache for you. So I would keep each one in its own bucket. And by bucket, I mean its own S Corp is a contract. When it comes to scaling and cash in the door, as far as you're not trying to live off the company, is the way I interpret the way that question is presented. I would probably run the debt level probably closer to the red line, and keep it more highly levered. Since you're not taking money out for other reasons, you'd be able to kind of make sure it stays in there to cover principal and interest on debt. And when I say red line, I consider the red line to be something approximating 80% of assets. So that means total debt obligations of the business approximate 80% of the total assets of the business. When you're getting into that territory, that's when a bank is going to kind of start putting the brakes on how willing they are to lend to you. We generally, if you're running not at the red line, we would recommend it being somewhere between 60 and 70%, which gives you the best chance for a yes when you're looking for that next growth opportunity. And ultimately that gives you headroom to be able to continue to lever your current business to expand into other opportunities. That's how I would answer.
Perfect. Yep. All right. One from Lydia here. She wishes she could play the piano. She thinks anyone who plays the piano is a genius. I agree with you. I think they also is a reflection of dedication that I do not have, because I definitely had some kind of piano lessons as a child that have translated none to current talent. So how often do drivers fuel the vehicles? Does your manager fuel them? Are your drivers given a card considering fuel theft? So this is something we talked about earlier. Yes, we do give cards to drivers. We have them fuel up. You can set controls with certain vendors that you use. You can set controls at the driver and at the truck level for the type of gas, the amount of gas that they can fuel. You can set limits on how much fuel a truck can hold. You can set things like it can only be spent on fuel. They can't spend it on anything else. So if you're just using a credit card, it's really hard to control a lot of those things. So it's really important, and it's why we recommend using a fuel platform vendor. So we use Fuel Z, but there's plenty of others that can work to give you that level of control so that you can give the convenience to the driver of having a card, but make sure that you're controlling for theft. And also there's data and things that you can get from those platforms to run your business more efficiently.
I see one about insurance. Let me answer that one real quick. I don't mean to jump in front of you, but it does bring up something I skipped over and I should have given clarity to. So when I was talking about insurance earlier and what things that we look at, insurance, when I'm talking about that, includes your workers' comp insurance on your employees, which is going to vary from state to state, and from your safety scores. There's a couple of metrics there that you have some control over, but not total control over. And then it's also going to include truck insurance. So the combination of those two things is what we put in that 6% of revenue or lower threshold. It does not include health insurance. That's more of an employee benefit type thing. So In our case, we would drop that down into the other category, but then we would obviously set our threshold a little bit higher for what we would be willing to bear in that other category as a percentage of revenue if we have health insurance. Line haul contractors, most of them have it. P&D contractors, not as many, but some. So that's a good point of clarification. I had missed that earlier.
Yeah, perfect. Okay, so last one here from Zach. You wished you could breathe underwater. I wish I could breathe underwater, and I wish I could not feel claustrophobic if I'm super. I went scuba diving, and that was something I was not expecting and experienced for the first time. So that's the other thing I wish about being underwater. So Zach's question was about seller financing first. Any advice on structure around seller financing? I would say it really is going to vary deal to deal. That's always a negotiable number. We often see it around 10%. Some sellers will do more than that as a percentage of the purchase price. It's rare to see seller financing all the way up to 10 years. I do see it sometimes, but I'd say it's more common in kind of the 3 to 5 year range. But it's really going to depend on the seller and their priorities and your priorities as a buyer to see what you can get. I'll also say that if you're financing the deal, sometimes the banks will have a say in what kind of terms they'll allow on that seller financing as well. So just make sure you're aware of that.
Exactly.
And then a second question from Zach. Have you been able to put a C Corp to good use instead of just S Corps, or are we all S Corps, or have you ever seen anybody use those well at all?
So don't have much exposure to C Corps. We have one, but it's not used for within the FedEx space. And then and we've got some LLCs for some other purposes, but S Corps have worked well. And so we just really haven't deviated from that. And it's really, from a corporate standpoint, you've got a little bit more hoops to jump through from an organization standpoint and documenting the overall business, but then it controls a little bit how you distribute cash out versus dividends. That's the other side, that the real world view of it is it's going to change how you take resources out of the company and how that relates to the taxable basis. So S Corp is just a little bit simpler.
Yeah, and I'd say the one scenario where you may have to use it is if you're doing a ROBS, a rollover for business startups, then you do have to use a C Corp to create that. So if you're trying to convert your retirement funds into basically equity, which is that ROBS transition, then you will have to use a C Corp. But you'll know if you decide you're going through that, you should probably either talk with your attorney or your accountant or someone like Guidant to help you through that process to make sure you're doing it properly. But that is all the questions we have for today, Leland. So really appreciate you coming on here and being willing to answer all these questions for all of our clients. So thanks for your time today.
Yeah, glad to be here. Thanks.
Yep. And then just a reminder for everybody, all of you new buyers, make sure to come to the buyer summits. If you haven't been to one before, we've got one next week and then 2 weeks after that. And then I really hope and expect to see all of you contractors out in Vegas in August. It's August 20th and 21st out in Vegas for our expo and party. So hopefully I will get to see all of you there. For everybody else, have a great rest of the weekend, a good 4th of July, and we'll see you next week.